What's going on, y'all? We are one win away from going to the Super Bowl. I know this is not a football show, but you got a big helping of Saquon Barkley yesterday. And is it possible the semis did something similar like a Saquon? You thank God you have him. Where would you be without him? Similar with the semis, they actually broke out today, albeit very small. New 6-month high in the SMH. We'll take a look at the chart. We've been waiting, seeing what's going to happen. Market looks a little messy. Obviously, some stuff happened, over the weekend, inauguration, new presidente, and so on. There were some movers here. We are less than 1% away from new all-time highs in the S&P 500, and volatility came in even more today. So let's take a look at the doc first. I will show you really what happened today. It was actually an interesting move. This was very much a lot of Europe flow today because of a big dollar move lower. So we'll take a look here. But really, if you were long Europe, that was really where the heart of the gains were. So, and biotech. So Europe and biotech, big rallies today, about 2.5%, depending on the index. I wasn't going to go through, obviously, all the charts here, but we were going to pick EAFE. EAFE was a good representative and a big mover today. Biotechs, we were actually talking about how bad ARKG had been looking. It was on my loser list from one of the worst, only two really bad areas last week to have been in, and it was volatility and biotechs. And biotech with a sharp, pretty decent rally today. We'll take a look at the chart. And then energy finally did reverse a little bit. I know, Trump was saying drill, baby, drill, and all these kinds of things. But energy did go lower today, and a big move in the dollar. We'll actually take a look at that chart, UUP, which I kind of rarely do. But it was a multiple standard deviation move. So dollar lower, rates went lower, bonds went higher. So let's take a look first at the intraday charts. Let me zoom over here. Boopity boopity bop. Man, I can't believe the Eagles are one win away. Really incredible. Football, markets, they're intertwined. They make sense. We'll get into it maybe during the show. Anyway, so a lot of crazy things were happening yesterday in the futures. I don't know if you saw, but there was a point where we were up about 2% or 1.5% or so. And then he announced the consideration of 25% tariffs on our North American partners here, Canada and Mexico, and then that took markets down. S&P was down about 50, 75 bips. Russell more than that, and then we had a little bit of a reversal here. So kind of tiptoeing trading here at 9:30-10. You can see lower shadows here on these the wicks. We got to actually 599 at 10 a.m. So not really super wonderful trading, or just very early on, and then it really started gaining strength. Actually overbought for the day session. We got to 600 here in SPY and held it. And you could really see VWAP picked up some slope here. This orange line, or volume weighted average price, picked up some slope here towards the European close. And we really started getting some gusto and actually closed at the highs at 4 o'clock. So pretty bullish behavior. Volume was really low. I think SPY finished with something like 35 million shares. That wasn't really where the trade was today, but pretty low. That's holiday type volume. But obviously there's other things that are commanding it. And just really quick look, we're actually not going to get into the SMH today. It wasn't a massive mover, but a very important 6-month high. Maybe I'll just put it up for poo and giggles. But NVIDIA up 2%. That was important, taking it to 141. Apple with a really ugly day. Apple had a couple of downgrades right there, down 3%. That was even off the lows. It was $2 off the lows with some downgrades. People aren't buying iPhones, et cetera, et cetera. But ugly. The stock was, just up every day, like in December. So all-time highs, and now I think it's down 15% since around that Christmas time. So ugly looking chart there. Other big mover, Taiwan Semi up 3.5%, Oracle up a massive 7% on AI investment deals. So we'll look at that for now. Hey John, we got a question here. Okay, I will take a look at that later, bud. Thanks. All right, so zooming out here, that was a shorter time frame. So now as I zoom out, like I said, so to me, upward bias, I still, that's my main call. The market's still going to have pretty amazing velocity, in my opinion, to the upside. I don't love chasing it here. To me, all the indices actually are at this pretty important point of just getting tired. I said before that I think we were going to do a lot of lifting, heavy lifting, getting to 595 to 600 in SPY. Here, people were freaking out on the 13th, about 8 days ago, thinking that the trend was over and we can't handle these rates, blah blah blah. And here we are. We've shot it above it here, and we're less than 1% away from new all-time highs from back on December 6th. So again, right around here, my level was around 602. It was between 600 and 605 level of where SPY gets tired. We're right around here. It's possible that the SMH breaks through. I'll just do it now since we're there. Because something important happened with the semiconductors. You need this lifeblood of the market, the really the starter. It barely did it, but it is a new 5 or 6 month high. But right here, did it by literally like about a penny. So we're nitpicking. It's a little bit tough. We want to see some more continued strength. Obviously, earnings are happening as we speak. I think it's getting very close to getting ready. Ideally, you want to see this go above 265, and then I think it would be marching towards 280, 285, a new all-time high. So that's my my thing on SMH. SPY, it looks like it could get tired right around here. Let's see the follow through. We have a lot of events here. Also, we'll look at VXX later. So that's my call on SPY. Wouldn't chase it. I think if we get animal spirits, you do get to about 610, 615. You need some vol expansion, and I'm imagining there'd be a lot of FOMO chasing to get us to right around where my cursor is here. But again, I'm not really sure that's my base expectation. We'll have to see how things are going. I think the Qs are racing right now with some of the big tech companies reporting earnings. So this could, thrust through in a day session. Let's see. Again, 1% away from all-time highs. You can get, with the concentration that's in the market, you get one of these big guys reporting and the gap up. That's new all-time highs for the index. So, let's leave that for now on the larger market. Let's now get into stuff that moved today, whether or not you were aware. Let's get into it. So big move today, obviously because the dollar and firms are going to get some funds. EAFE, a major mover, up 2.1%. Pretty much every European ETF was up today. FEZ, FEZ, EAFE. Yeah, a lot of the VEA, the developed nation one. So anyway, ugly looking chart rolling over. You had a nice week here in the first week of December, but this does not look like a great story after it peaked at the end of September. You got it looks like Steiner or ironclad support here at $74. So I like getting into that there, but again, oversold conditions. Christmas week. This may have a little bit further to go, as high as maybe 79.5. Try to chase this 200-day, but to me at that point, I would potentially sell it. Do not love the chart here with that. So maybe have a little bit more good-looking candle closing pretty much at the highs. Maybe a little bit more follow through, but after that, I would have this being a sell signal if you get to 79.5, and I would think this mean reverts to about 76 over the next month or so. All right, the next area, there's really not that many areas that were really taking off today. Europe, 2% is massive move for that ETF. Another one was ARKG. We were highlighting this as a loser last week. A big move up 8%, and here it catapults right through the 200-day moving average to the upper Bollinger Band. Let's see. Nice looking close too. Closed at the pretty much at the highs. This is such a crazy group. Still looks overall heavy. I mean, this might have a little bit more follow through to about 27, and then I would probably short it. I don't think it holds. So see if it gets potentially as high as around there. I think that'd be kind of like a clean setup if you want to go contrarian. If you need looking for some shorts, there's definitely worse areas that you could be in than short ARKG at 27. About 8% above the 200-day, a fall on 200-day moving average. So be on the lookout for that. This one's going to be, I think, topsy-turvy, though, for the next 2 weeks. I think it's going to be above the 200-day, which is, right now as it stands, 25.06. I think it'd be above. It's going to be under. I think it's going to be pretty frustrating, but end up resolving lower. All right, so those were the winners today. Europe and biotechs. By comparison, I believe the broader biotech ETF was up about 2%, 2.5%. Yeah, exactly. 2.5%. And that chart also looks ugly, as you can see here. A little bit of a longer, better week in the first week of December, but overall the same picture still remains after this group peaked in the fall. All right, the losers. It was the XOP was a big loser today. XLE on its own actually held up okay. The XOP down 1.2 was a pretty meaningful move for the group. As you can see, it goes kind of like what I was saying with the other chart. We're now 3 days or 4 days above the 200-day moving average. Still falling. Don't love this area, XOP. I think this one is at 138 in about, within 2 weeks or so, and potentially, as low as 132. So that's my forecast on specifically XOP. There's areas that are weaker than others, obviously. I wouldn't really go nuts with the broader XLE, but XOP has been on our radar more, and it does look particularly weak. Interesting, little surprising reading of getting overbought for the first time since April on these just 4 readings above the 200-day moving average. That didn't happen here back in November. So interesting, especially coming out of an oversold territory. But this is a monster rally, 125 all the way to 145 in just, a handful of weeks. I think that was enough, and I think this starts to descend towards about 138 and undercuts that 200-day moving average soon, within 2-3 weeks. All right, the dollar, we were talking about this. So a monster move lower today. I'm sure you'll see reading about it, hearing about it. That was a big move for the dollar, down 1.3. In terms of technically speaking, looking at this chart, wonderful chart, an amazing rise, especially since October. 52-week high for the dollar through this ETF on December 19th. I would not throw this out. It may come as low and test that 200-day moving average at about 29 even call, so maybe another % lower, which makes this such a big deal. So I think this actually does start to slide lower. Now we'll see how the narrative all comes together. I think this actually does slide slightly lower to about, the bounds of like not a ton more, about 29 to 29.15. You see rates go a little bit lower, and you see that be a tailwind for the markets, and that very possibly is the move that gets us to new all-time highs. We'll see. We'll take a look at the VXX too. That's very close to putting in new 52-week lows. But yeah, this looks decent. I think this gives a little bit more relief to the market, but a big move lower for the dollar. It's been on a amazing tear since October. That's a massive move for the US dollar. And then lastly, we haven't looked at this chart in a little while. TAN was quite a loser today, down 2%. It's had bigger moves, but down 2% today was one of the areas you saw to the downside. A lot of folks had said this is a massive space. This is the place to be in 2025. I disagree. I'm not predicting anything. I deal in life with probabilities. This thing put in a low December 20th at $32. The best rally it could muster was 36, and then it gave pretty much all of it back, and then here we are. So that to me is not a turnaround at all. This may base around here, may go a little bit lower, as low as 32, and then possibly I'm seeing a mean reversion to about 34.5 or so. But I still don't. The point of this is to see the weakness in it today, and I don't think this is going to be a turnaround anytime soon, in my opinion, in solar. Okay, top 3 gainers of the past 5 days. You'd be surprised, or maybe not. IBIT, the absolute best place to be, up 14% in the past 5 days, up 1.3% today. I'm sure you've seen, some announcements. Obviously, had his own, the Melania coin and the Trump coin and all this craziness listed on Coinbase and such. And crypto is still doing very well. I believe Bitcoin itself is at like 106K or something like that. We're looking at the IBIT here. So we had been saying for a while the chart has looked good. Looking at my notes, I really recommended getting into this right around December 30th, December 31st. The price was specifically on this asset right around $52. We are at 60. My target then, to be frank, was $62. It actually still is right around $62, which would be matching or just eclipsing, just a touch above new all-time highs for Bitcoin. Yeah, so December 17th was 61.75. So I'm seeing us getting close to that. You can wake up and it's going to be there in IBIT. But my target's 62, and then I do see a mean reversion, kind of like what we talked about last week. I do see this pulling back to about 56 or so. So you'll have that kind of like, not a rug pull, but probably 110 or so in Bitcoin. Then it goes right back down to 99, and everyone's freaking out because all those orders are there at 110 from folks that got in at $2,500. So, but yeah, a nice rally continuing. For several weeks now, just in at least short term. And it's still, even as it puts in those highs or very close to it, we're still essentially just basing and doing nothing almost, or at least I'm not going to say nothing, but being in a range from 50 to 60 since the week after the election. So really strong performance. And just the last thing to strip away, this thing's in the majority closed above a 50 RSI since mid-September. So nice sentiment, scorecard of a profile for 4 months now. And there's buyers in every kind of a marketplace. High rates, lower rates, tech's doing well, oil's doing well, not, it doesn't matter. There's lines of buyers for this. And that's why it's the top performing ETF of the past 52 weeks. So that is the best ETF also of this past week. Number 2 is Ark, up 8.5%. A very good week for Ark. Hold on here, boopity bop. So yeah, these guys had 52-week highs in early December. I call it $63. We're trading $61.75 now. In the short term, let me just take a look here. This could have a little bit more to go. I probably see this getting to about 60, probably 60, maybe even 63, $64 for this. Ark, again, one of the absolute best performing ETFs during Trump's first presidency. I don't know if a lot of people know that. Obviously, there was Shopify. There's lots of individual, obviously, constituents that she nailed it. Roku, I think, Square or whatever at the time. But it's finding its legs again. Look at the slope. The ETF honestly had done nothing up until bang, again, reporting overbought conditions and a slope in the 200-day moving average when they happen, basically 2 days after the election. So this thing also has a good profile. I would be involved in Ark. In terms of local setup, I would be a little bit careful. I think this is going to run to possibly $64 to new 52-week highs, and then I think it could have a kind of a nasty pullback to about $59, and that would be your entry, a better entry. All right, and then lastly, regional banks, third best area, up 8% in the past week, up 1.25% today. This group also peaked a couple months ago, basically Thanksgiving week at $70, and then these guys have really been doing super well in earnings. These guys are the majority have reported corporate earnings in the past week. And some of the really legacy type companies like a Bank of New York are now getting double-digit earnings growth, which is kind of unheard of through just higher fees. And of course, Trump is mad dereg mode. So people feeling very bullish on financials. This group has come up quite a bit. Got very close to its 200-day moving average right here in the 10th and the 13th. These were your closer local lows to have gotten into this name at a discount. Now, it may have a little bit more to go to about 65 even, but after that, I do see it taking a breather and then mean reverting to about 62. All right, so I'll take about 2 to 3 weeks to unfold. All right, and then top losers of the past 5 days, there are 3. Number 1, volatility down 13.5%, down 4% today. Important to note, the 52-week low, obviously this is a non-time series, so it's sometimes people don't like to chart it. The point of this I want to make is the 52-week low for this, which typically corresponds with the inverse relationship with the S&P hitting highs, VXX hitting lows, was July 12th. So it has to do with the pricing of puts and options on the S&P. Loosely is how we construct, or it's how we construct the VIX. This is VXX, which is the short-term futures. So the chart looks pretty ugly. It's not something you want to be long. This was at one of the best shorts of all last year. I've been looking and trying to call for, new 52-week lows in VXX. When's it going to happen? Last, like I said, was July 12th at $40 even. It was split adjusted after the fact. So the point I also want to make is, so we are exactly $2 away from that. So if you get another move like today, this 4% contraction that we had today, you're at new 52-week lows in VXX. It's pretty funny because we just have from extreme fear to extreme greed. Basically changes in about a week, and you may have a new big indicator in this. So I do actually, I think this will actually make a new 52-week low in the next 2 weeks. I think the exuberance and the FOMO of the earnings could be what puts this over the top. And when I say over the top, I mean under the bottom, and that's under a 40 handle. Okay, not a ton of losers this week. So volatility, if you were in that, yikes, because that one's been going down. The other thing, we were saying maybe there's room in your portfolio for this. Nat gas down 3% in the past week. It's also down 3% here, just today alone. So let's take a look because this is a pretty interesting hot area and space. We'll see if this is really the beginning of the downturn. So on the 16th, this Pearson got as high as $20, a very extraordinary. After that, the 52-week high essentially is at 21.5. So pretty really rocket levels from putting in the 52-week low in just November from a 12 handle. So this thing has actually done quite a bit of a move, honestly, in just 5 days, from $20 to about 17. It's gone from almost 52-week highs, and now it's at basically a percent above its 21-day exponential moving average. So to be frank, I would rather. It's a messy, ugly chart when you have turnarounds like this. I want to see what this week's trading brings, and if you could get in around 17, I think you could have a starter position. I don't think that's the worst thing in the world, so that you are aligned for if it does properly make a move towards 19. And I actually did say this about 2-3 weeks ago. If it doesn't overtake the 200 moving average, even if you place loosely a 1 year 50% Fibonacci, this could get to $20, $21. And that's literally where it's getting to on its next run, I believe. So starting position is 17. There's worse places that you can be in. And then the last thing, loser of the past 5 days, although you barely notice it, it's oil down to 1.5%, and most coming from today. Don't forget, USO, 52-week high for this group 6 days ago. So a lot of people, I don't think, realize that. But oil, actually, through USO, hit a 52-week high last week. It's had this crazy run since New Year's Eve, honestly, from about 75 all the way to 85. I would stay away from this right now. I think this possibly is the beginning of a little bit of normalization, and I think this pushes down to about 76 to 78. What I'm interested in seeing, and that's why I'm interested in the flows of seeing XOP and how weak it is versus XOP is the producers, how weak it is versus XLE and the broader energy complex, is to see exactly where the commodity itself would fit. So, meaning, I actually do think this will hold this very heavy 200-day moving average, which is now at 75 half, call it. I do think this comes down, and I think that holds. And if you're patient, I do think energy, specifically oil, you could buy. Again, not oversold at all year, and overbought measures just this past week, and then also last April. So there's worse places. I feel like I'm saying it a lot, but there's worse places that you can be in. Last I checked, overbought condition, a 1 month high in the past month, and a 200-day moving average that's maybe starting to pick up. We'll see. Frustrating here that's lived under the 200-day all the way until the end of 2024, and then boom, 2025, the calendar turn, and this thing's been nothing but positive. So let's see how it goes, but I do see this mean reverting to about $78, potentially 76 over the next 2-3 weeks. And if you're not gun shy, you can get in there too for some diversification. All right, so top 3 trades in the past 5 days: long IBIT, short vol, and long Ark. Those have been crushing it. Again, those crushed it during the presidency. This is kind of like a lame, just copy paste trade. I know they say hedge funds have been doing it for since October. I'm just saying the stuff that worked before seems to be working. It's short volatility. We were up every day, I think, in 2017 with no more than 1% down days. That's going to be a drag on VXX. Bitcoin's continuing to do well with hitting highs. And then long names like Ark is going to give you exposure to the stuff you need. All right, last thing, we do have a user question. Ooh, how good is Saquon Barkley? He's good. No. Hey, John, I have to go now. But can you later give me advice on when to enter long in Tesla? It's funny. So I am long, like I said, through synthetic. I'm getting out by the end of the week. I am up some on the position. So let me pull this up here. And it would have helped, I guess you bounced. Would have helped to know your time frame. So just to give you figures, the 21-day exponential moving average is 410 on this guy. Obviously, Tesla's a volatile name, and these guys report on Wednesday. So that's probably going to rock your time frame or your holding pattern in this regardless. But the upper Bollinger Band on this is as high as 490, and that would be new highs for the stock. So can earnings do it alone? Possibly. If you get in under 410, to be frank, I think my position, I got it at 395 through the synthetic. So yeah, I'm up. And I will be exiting soon before earnings. I don't want that kind of risk. Don't need it. If you could, I don't know how well, like I said, your time frame. If you would get in this under 410, the thing was ugly today. The lows today was 406. They handed this lower. Some of the other EV names got really crushed. If you get this under 410, I don't hate your entry level. And like I said, upside target. Yeah, I'm still bullish, especially given what we just talked about the market being an Ark and names like this. I think this could get to 480 490. That's probably going to take, I would think, a little bit more time outside of a big earnings move Wednesday night, next Wednesday. So I hope that helps. Peace out.